Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everybody. Welcome back to Facts versus Feelings. Ryan and Sonu. We have a good one today, Sonu. Episode 140. We're getting up there when you start talking about 140. But this week, we're going with the flow with Sam Rowe. Our producer, Josh, came up with that little catchy one. Sam, is this your third or fourth time? Or we probably should know this. How many times you been on here? You're a repeat offender. I know that much.
Yeah.
That's a good question. I think this might be three. Okay. Or, if we include the time we did that,
the live stream.
In Nashville. It might be like 3 or 4.
Yeah, it's like 3 1/3, right? Because you're
right.
1 out of 3 in a panel. But no, it's fantastic to have you here. Thank you.
Thanks for having me.
Was that one in Nashville? The one in that little room?
Yeah. The one in the little room.
In that conference center, that was this gigantic maze.
Yes, no one could find the room. And anyway, we'll leave it there. But Sam, we're pumped to have you back. We're obviously huge fans. Just so everybody knows, we're recording this. What is today's date? June 11th. So we are recording this probably a week or so before most people listen to it. So we're going to talk big picture and things. And again, welcome back. We're huge fans. Just tell us. Let's start with kind of the easy one. What do you do all day? And again, just remember, we work with financial advisors. A lot of financial advisors listen to our podcast, so I know you've got a lot of financial advisors love your stuff. How do you help financial advisors, and what do you do all day?
So,
or maybe get your title too. We love titles in a world of compliance.
Yeah. So, I'm the editor and founder of TKer, a newsletter that goes out to anyone interested in keeping up with what's going on with the stock market. My background is in financial news, as some of y'all know. I worked at Yahoo Finance for about 6 years as their managing editor. I ran their newsroom. And before that, I was at Business Insider for about 6 years running their markets coverage. And so basically what I do all day is actually not too different from what I was doing when I was in the news business. You get up, you see what the markets are doing, you see what data is coming in, you see what the earnings announcements looks like, you hear about the corporate actions and all that good stuff. I think the really big difference between what I'm doing now and what I was doing in the news business is, I'm in fewer meetings. That's a nice thing about being an independent operator.
Are you hiring? I'm teasing.
I'd love to. Just a couple more subscribers and I'll be there. But yeah, I'm absorbing as much news as humanly possible. But the big difference right now is, when I send out my newsletter, I try to really focus in on, any data, information, updates that appear to be actually consequential when it comes to financial markets, especially in the context of long-term investing. Any number of things can, potentially move markets over very extremely short periods of time. But, for me, I think my subscribers look for a little bit of curation when it comes to the volume of news. So I don't publish quite as frequently as I did in the news business. I don't publish, 200 pieces of content a day. I publish a few times a week. I aim for a few times a week, and I have a Sunday newsletter that goes out that's free, that has a roundup of all of the week's data and news and information and updates.
Well, we will link to the show notes to TKer. One more from me, then Sonu jump in. When did you start it? Did you start it like right before the 22 bear market, I assume? When did you start? Isn't that how this stuff works?
Yeah, that's exactly how it works. Yeah. I started in October of 2021, I think.
Oh, perfect. Right at the peak of the SPAC bubble.
Right at the peak. Yeah. And the funny thing, the slogan for my newsletter is the stock market usually goes up, or telling the story of how the stock market usually goes up. So of course, it would be at the top of the market when I launch, and we enter a pretty rough bear market. Yeah. But I think that ends up becoming really instructional in that story of how the stock market usually, because the word usually is doing a lot of heavy lifting, right? It's not always going up. It usually goes up. And I think part of the, maybe the most important thing for investors to understand is that, you can get smoked in the short term. You don't know when it's going to happen. You don't know how big those drawdowns are going to happen. If you follow Ryan and Sonu, there's lots of data in terms of like all the variability of and the ranges and the variation and the lengths of some of these bear markets and things. It's hard to be really precise as to what kind of downturn we're looking at and when that's going to happen, but as your data shows and as the market history shows, these things happen. And so I think that actually ended up becoming a really big advantage for me in telling that story and sharing that data and amplifying the data from all the various sources that send me research, including you guys, is that a critical part of the stock market going up is bear markets, and they happen.
Mm-hmm. Yeah, it's a price you pay, right? No, one reason, just to follow listeners especially, I like reading your stuff, which I do, is it sort of level sets me back to seeing the forest instead of the trees. And you collect you read all this research, which I would not have the time for. I feel like I'm getting the best curation there. And even like a broad takeaway, right? But on that subject of data quality, data basically, and the variability and dispersion, and we got CPI data today. We don't have to talk about it. But you recently wrote something about how data quality is becoming an issue. And the BLS, the Bureau of Labor Statistics, put out a note, I think it was last week or the week before, saying they are collecting fewer samples. Like when they go out and figure out, okay, what's the price of milk? What's the price of airfares is tricky because it's a whole other calculation. But a lot of different things. They actually have people on the ground looking at these things. And, they don't have enough people right now. So they've stopped data collection in places like Provo, Utah, Lincoln, Nebraska, and even Buffalo, New York. So talk about that.
Sorry, I'll just jump in. Do they need help with milkshakes? Because Soda and I, we'll do that for free. We will go get prices for milkshakes for free. I will do that for you, government.
Yeah, I'm happy to do that too. I'll send a credit card bill because there's a couple. I go to McDonald's every week, or not every week, every month, and I can give you that price over time. But yeah, it's a big issue, and it's something to be concerned about. Like, how strange is it that as advanced as technology has become and how everything gets more efficient and cheaper to do, we're finding data quality is deteriorating. I think it's very specific to the stuff that we're getting from the government because of whether it's budget issues or staffing issues, or even if those things were static, they're also facing issues in terms of response rates. The response rates for a lot of the surveys that they take are falling. And
we just talked about that with the payroll report. Like March payrolls originally were 228,000. It was revised down to 120 after 2 revisions.
Yeah, so I think there's a couple things that are really important about that. First of all, it reminds us that this high level macro data that we get every month and every couple of weeks is derived from surveys. There's no way for every month for the government to confirm that all 100 million people showed up to work that month. They extrapolate from talking to a couple thousand businesses, and then they model that out. And so it's based off of samples and it's prone to error. They have incredibly smart statisticians and scientists that put this stuff together to make it as precise and accurate as possible. But when they decide to have budget cuts and you have fewer people monitoring this stuff, it deteriorates. But I think there's another thing to think about too, though. Data is used differently by everybody. If you're an economist doing academic research, you need this stuff to be really accurate as you sort of make your conclusions and projections as to where you think the economy was and where you think it's going. It's very important for policymakers to get incredibly accurate data. Whether it's CPI or the jobs report, whether it's fiscal policy or monetary policy, people are making decisions on this stuff, and this stuff affects lives. It's also important for, the investor class, your clients, the people who subscribe to my newsletter. This stuff matters. But, let's also remember that, to a large degree, because of our audiences and our clients, we generally think of economic data in the context of what it means for financial markets and the various investment asset classes that we're dealing with. And one thing to remember is, I think you guys generally agree with me, but I believe that over time, the most important driver of stock prices are earnings. And, fortunately, all the publicly traded companies out there are required to report audited, complete financial statements every quarter. And, generally speaking, this stuff is, well, first of all, it's very comprehensive. There's a cash flow statement and a balance sheet that's attached to all this stuff. So we know every transaction and every contract and agreement that these companies are involved in. So this is not based off of survey samples. These are complete and they're audited. Outside of those few instances of fraud and internal failure, these numbers are very accurate, and on extremely rare occasions do you hear a company go back and restate old financial statements. So, as investors, we do have this, benefit of every 3 months getting actual information that's not going to be revised. Before I can talk about this for hours, but I'll say one last thing about how economic data and that information is intertwined. Sonu, you mentioned how recently we got a lot of downward revisions to labor market data. So on one hand, that's a problem for the economy. It's like it turns out things were worse. There were more people who were on the unemployment line than we thought, and that might have implications for the economy and down the road. But, what does that tell us about the companies that we invest in, and what does that tell us about earnings? Well, you start to get these sort of like counterintuitive, you can draw some counterintuitive conclusions, right? We know those sales and earnings that were reported aren't going to change. So if it turns out that there was less manufacturing activity going on during that quarter, but we had a certain level of output, we know that productivity might have actually been better. Or that if there was fewer jobs than we thought, but we still have that same level of sales and earnings, then, well, if these people went back to work, then that actually ends up becoming a tailwind. So, there's a lot of complexities there, and there's a lot of nuances. But, yes, ultimately, when the data quality deteriorates, it's a problem for everybody. That said, I think the investor class, are well advised to take information as holistically as possible, because maybe a couple of surveys are deteriorating, but, maybe it's a reminder that you shouldn't just rely on any individual data point at any given time, right? If you look at enough stuff, it's very difficult. It seems unlikely that 80 data points are all going to be faulty and they're all going in the wrong direction. You should still be able to extract some kind of pattern or narrative when you cover as much information as possible. So
Sam, that was great. A lot of stuff to unpack there. You did, as June 8th, I wrote this June 8th in your recent report, you broke this down and took a look at this. And it's funny because sometimes I'll do something or Sonu writes something, and all of a sudden you see a lot of people out there talking about it. And I saw like Bloomberg wrote a story, I think, after you talked about this. So that's really cool. I want to change gears for a second, though. You did an awesome podcast with Joe Fahmy, a buddy of mine and a buddy of yours out in Vegas. You were in Vegas for that one, or no?
Yeah. I was, let's say, catching up with old friends.
Okay, and we'll leave it there. If you're in Vegas, we get it. We get what happens in Vegas stays in Vegas, and your podcast stayed. It was a great conversation. You really got into the weeds of kind of your career and how you became who you are. I've talked about myself. Like, I'm not a CFA. Sonu's not a CFA. I think not having that part of my brain has made me honestly better, because I don't think like a lot of other market strategists. But you were a religion major in college. I'd love to kind of talk about, honestly, kind of what you mentioned with Joe, just kind of your career and how maybe that helped you in a lot of ways with what you're doing now. Maybe it hurt you in a lot of ways, but talk about, with a religion major, how in the world you ended up talking to us on this podcast.
And maybe how, using a different lens into data and financial markets, which I think, I always think maybe that's a underrated strength of, Ryan's and hopefully myself too.
Sure. I mean, if we go even a little, just a tiny bit further back, and, I didn't mention this on Joe's podcast. This is
give us something new. Give us something new. Yeah, let's top Joe.
Feeling exclusive. I actually started as an undergrad as an astronomy and physics major.
Ooh. Okay.
And, I was just, again, fascinated by celestial mechanics and, how, the universe is expanding and all this stuff. And there were two problems with that. The practical reality of studying, hard science in college is you're spending a lot of time in labs, learning about the scientific method and the scientific process. But 4 hours, twice a week. In a lab, dropping a ball and taping it and, measuring, deducing gravity is really bad for your social life in college. So that was one thing. But I think the bigger thing, though, was, I'm absolutely not qualified to speak on this in any really sophisticated way.
This is the perfect podcast for that. So become an expert, no problem.
But what I learned, the more you dig into physics, the more, you have Isaac Newton and, these people who created these models that make perfect sense and everything happens in a vacuum and, every reaction comes with the, equal opposite reaction and everything is so finite and it feels good, right? But then you dig really into, how all this stuff works and you learn about quantum mechanics and you learn about theory and you learn about uncertainty. And it's it seemed like if I was going to do this for another couple of years, ultimately you're going to get to a place where you have no idea what's going on. And the physicists will tell you, and the Nobel Prize winning theorists will come back and tell you, everything we thought about, for the last couple of hundred years, we're changing all of that. Galileo changed everything before him. Newton changed everything before him. Einstein changed everything before him. And then, every couple of years, some physicist comes out and says, everything we believe was wrong.
Wow.
So, meanwhile, I was minoring in religion because it was interesting to me. And no disrespect to people who are religious, but something I did find interesting about the field of religion is that contrasted with hard sciences is with hard sciences, again, like scientific method, right? You can never really ever prove anything. You can only disprove things to get closer to some sort of truth, but you never really know what's going on, right?
And so you have to come up with a null hypothesis first.
Null hypothesis, yeah. You have to reject null hypothesis all day long. And that's all your goal is in a lab is come up with an idea and then destroy it. But yeah, so hard sciences is all about working on explanations, but you never seem to get to any kind of answer. Whereas with religion, it seems like all these people have all the answers. It's just that the explanation to getting to those endpoints is sort of murky. So, using that as kind of a framework as to sort of how my way of thinking evolved. Fast forward a couple of years and a couple of jobs, and suddenly I'm getting exposure to equity research for the first time. And this whole concept of the stock market to me was, initially very alien. This was not a thing that I got exposed to until I was, maybe 23 or 24. Because I thought the market was effectively like a hard science with some statistics involved. But as I began to get exposure to equity research and how this stuff works, it's a combination of both, right? We have financial models that are theoretically sound, but all these inputs are affected by these behaviors that are very hard to measure. People deciding to buy, this brand of good versus that brand of good. And then among that, you're looking at economic cycles. And, if you really get into, fundamental analysis, the hardcore CFA stuff, all this, you can't really do a valuation unless you can project, all the business activity into perpetuity. So you're making assumptions about businesses that they're going to last forever, which never happens. Right. So the CFA for me, and so we're getting finally to the question. The CFA was fun because you start out by learning all the math and all the statistics and how the financial models work and this closed universe of accounting. And then you keep studying and you keep studying and you keep studying. And then you learn things like garbage in, garbage out, how it's so impossible to predict anything. And yet, as financial advisors or analysts or whatever, you're guiding people to invest in this stuff based off of, I'm not going to say things are hocus pocus, but you have to, have faith.
That's a belief, right?
You have to believe, you have to have faith that some things will continue down the road. People will continue to shop. I don't know what they're going to buy, but they're going to buy something. And maybe some of the stocks that I'm invested in, sell some of those goods and services. And so I found that really interesting to me, getting exposure to equity research, and then studying for the CFA, which also has a lot of exposure to behavioral biases and all this stuff. So, if anyone's listening out there that's still in school or looking to find something to study, finance and economics is amazing because it's a marriage between something. You use hard sciences to try to understand how the world works. But then at the end of the day, you have to have a certain degree of faith in the inputs that you're making, that people will behave a certain kind of way, depending on, the various stimulus that they get hit by.
Yeah. It's funny. It's safe to say people probably will do the opposite of what they should do when it comes to psychology, as we've seen. Go ahead.
For sure.
I was saying that I had a similar path into this because I did engineering, and obviously that's, a hard science. It's applied hard science, right? Otherwise, your plane's not going to fly.
Right.
Right. But what's amazing, despite all the physics, and it gets to your point about, things will work out. We've gotten the plane to fly, even though the physics has changed, over between Newton and Einstein and quantum and all of this stuff in the 70s. Right.
Right.
Ultimately, and, when I started, I did a lot of computational work. And with us computational, quote unquote, scientists, I mean that with, sort of tongue in cheek as well. That you think, everything can be modeled, right? And now we have AI and stuff. But then, if we could hardly get anywhere near any, factor of safety with respect to modeling just how an aircraft flies.
Yeah.
Right? And if you look at the weather, that's based on computational fluid mechanics. And they're like, wait, the weather report said it's supposed to rain. It didn't rain, right?
Yeah.
Like we couldn't even get that right, right? Even after all the computational power that we have. And ultimately, to make the plane fly, what do? We, throw it off the ground, throw the model airplane, into a wind tunnel, and that's how we get it to fly. Trial and error, right? But that's what makes the world tick. That's what makes things move. Literally.
Yeah. And then, even with that, whether it's fluid dynamics or aerodynamics and, all these things that Bernoulli equation, air pressure, the scariest thing, you don't tell him. I mean, you guys fly all the time, so but you guys are smart. You understand.
You say don't tell anybody. You do know people listen to this, right? Like a few people listen to it. At least my aunt listens to it.
The thing that's so crazy about science is, again, there's always like, and this is also in markets and economics too. Nothing happens 0% of the time, and nothing is assumed to happen 100% of the time. Mm-hmm. So it's like, a plane could be fully intact and everything's going right, but it's all based off of this assumption that physics, let's say something as crazy as physics works. Well, what if one day physics just doesn't work, or for a microsecond physics doesn't work? I mean, there's insane. I mean, if you talk to like quantum theorists and all this, they'll tell you insane stuff. Like, if you sit on a chair enough times, there might be a moment where all the molecules are aligned in such a way where you're going to fall right through that chair, and that's just statistics.
It's funny, that bias for hard science sometimes. Like, I fly all the time, but I have never flown in a helicopter. And part of me is just every time I look at a helicopter, I'm like, goodness. And by the way, this is not a recommendation, anything like that, right? I'm sure a lot of our listeners have flown in helicopters. I don't know if you two have, but I feel like that thing is literally doing everything to fall apart. It's doing everything to make every piece go in different directions. Right? I think about how because it is impossibly hard to model, like not impossible, but extremely hard to model, helicopters and flows around rotors, things like that. But, but still, it gets to the fact that talking about finance and economics, it's hard to model this stuff. And some of it is faith. Like when Ryan shows that line about the Dow, you were sharing with our advisors, like all these events, right? World War I, World War II, Cuban Missile Crisis, Iran, and, COVID, all of it, right? And that line just keeps moving up.
Yeah, right? And, I will make one distinction, which I think might be a little bit more hopeful for us in finance and economics, is, in science, there's always this grand question of why. Why is any of this stuff happening? Why do we exist? Why do things happen a certain kind of way in the universe? And, why does good and evil, blah, 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 blah. Okay. Something that I think is this is a foundational assumption for me when it comes to thinking about why the stock market usually goes up. Well, behind that is this idea that earnings usually go up and the economy is usually growing and then from there, what explains all that? Well, I think behind that is just this, unending desire or need or whatever for everybody to want things to be better, right? Whether it's your quality of life, whether it's, your Wi-Fi could always be more stable.
Oh boy.
Or the internet speed could be faster. Or if we've reached light speed with the internet, maybe it could get cheaper. So there will always be a demand for things to be cheaper, better, faster, whatever. And as a result of that, there will be incentives for people to pursue that kind of work because they know that there will be a customer on the other side of that creation or that innovation. And, you reach a certain kind of scale, you start trading in the, as a small cap or in private markets, and then you eventually make it into the markets and squeeze out old technology. And then those earnings grow and then that cycle starts all over again. So I think found that, even, when you think in the context of conflict and all this stuff around the world, everything actually ends up becoming rooted in this idea that people just want things to be better. And it happens to be the case that, capitalism sort of latches onto this thing. And a great way to get exposure to that narrative is to be long stocks.
That's a good way to sum it up.
Better Wi-Fi and maybe cheaper Wi-Fi. Today's CPI report, internet services down 3% year over year. But I don't know. My internet hasn't gone down. I can tell you that. Unless I change service modes. Maybe speaking of data measurement and quality and stuff like that.
There's a running joke because if you listen to last week's podcast, I was having issues with my internet and I'm still having issues. But so far during this podcast, things have worked. Again, this is episode 140 of Facts versus Feelings, going with the flow with Sam Rowe. If you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave a review. We love your feedback, and then feel free to email us, factsversusfeelings versus VS, factsversusfeelings at carsongroup.com. Well, Sam, we've gone a lot of different ways, and something that struck me that I just saw the other day, and I'd love your take on this. It's happening real time. You think about AI. I'm leveraging AI a lot more than I was this time 3 months ago, and a lot of people are in the same boat. When you go on Google, we just redid our basement. That's why I'm using Wi-Fi versus being hardlined in. My hardline in is on the other end of my basement, so I need to have Spectrum come out and physically move it. But I was building something I forget which one. I think it was this. I've got like a air hockey table right here in front of me. We fixed up the basement down here for the boys. And I was having trouble figuring something out because I didn't have the old instruction manual. So I just Googled it, and literally an AI chatbot gave me the answer. In the past life, it would have given me a link to the old website of whoever made that, that hockey table there. Now, here's where I'm going with this. And you probably know what I'm going with. Business Insider, big fan of Business Insider. You work there. I read it all the time. They came out with news that their views are down 55% the past 3 years because of what I just said. You ask Google something, it gives you the answer from a chatbot. You don't go to the website anymore. You've grown up in the world of the financial industry, media, managing money, working with people. I don't know the answer to this. I just want your take on what in the world's going on and how do businesses succeed if it's just a chatbot that's going to give us the answer now.
I want to ask you a question related to that because I know you read a lot, but do you actually read, if Michael Mabusson puts in, wrong example. Some other sell side, Mabusson, you always want to read it, but some other sell side report comes out. Do you read it or do you throw it into Perplexity or whatever and say, give me a summary?
Yeah, that the gap between having to do stuff and not having to do stuff is closing very rapidly. It's interesting. These are really tough questions. So I think there's two ways to kind of think about it. I think that if your advantage is using, and listen, it's also not black and white, but I think there's sort of opposite ends, and then there's a spectrum here. On one end, this is a technology that's going to save you a lot of time and a lot of money and a lot of headache, and the quality is improving, very, very, very rapidly. I think any of us who played around with this stuff for, the last couple of years knows that increasingly when we do that fact checking, it's airtight. This stuff is getting really, really, really good. And that's a problem for the people who are providing all that information because they have newsrooms and they have people I have to pay rent, know, and just recently I'm starting to, sometimes I use Google to look up topics and maybe even look up, some of my past stuff. And instead of getting links to TKer or Yahoo Finance or Business, I'm getting the summary of what Sam Rose said and how he explained it. And I'm looking at it, and not only is it accurate,
is it better?
It's written better than how I would have written it. So here's what I'll say. First of all, as a grand big picture thing, it's very scary for everybody who's exposed to this, and anyone who's been made vulnerable by any development, since the beginning of time will tell you the same exact thing, whether it was, the internet or, one of our favorites is, Bill Gates releases Microsoft Excel, and then a whole bunch of people who used to write books by hand do the books by hand. It's like, well, what are we going to do now? And there's a lot of instances. So it's just from a big high level, and I'll get back to all of my personal issues. But from a big,
we have enough time. We could all talk about our personal issues. I don't know, we might need an extra podcast.
That'll be for the fiction side, feeling side.
That's the blooper reel or something later.
Yeah, the bonus content for the paid, the premium, facts versus feeling premium. But historically, really weird things happen. So when Excel comes out and disrupts the entire accounting industry, it actually ended up creating more jobs for the accounting industry for people who could specialize and really fine tune because there was more demand for more advanced stuff. Now that people weren't bogged down by just doing math all day long, and suddenly, things get a lot more sophisticated and people get better and efficiencies happen, and there's still a human component that makes things better there. And we can go all the way back to how ATMs didn't actually destroy banks or whatever. But I think for for media, I think it's still requires a certain kind of judgment to be made by humans. I'm sorry if AI is listening, there still has to be some judgment made because there's still a big gulf between how an AI makes a decision versus how a human makes a decision. And this is actually something I dealt with in newsrooms for a very, very long time.
Sure.
Because AI is basically a manifestation of all that data that we have been gathering for a very long time, and now people are sort of seeing it, in their face. If you've been in the digital news business for any moment in the past, 25, 30 years, you've had, people from the audience development team or the analytics team, or you might have had access to your own analytics to see, what the audience responds to, what clicks, what doesn't click, what words, incite excitement, what kinds of stories, how do you find stories, see what's trending in social media, see what keywords are trending in Google search. And, there are people who are always in these newsrooms that were, trying to influence editors to say, hey, I know this story about, inflation is really important, or the CPI report is really important, but it doesn't click as well as, some trillionaire getting in a fight with some billionaire who's sitting in the White House, right? And so I think that there's still a little bit of divide there because, the output you're going to get from AI, and I'm sure it's going to get better, and I'm sure the prompts, it also depends on your prompts, but it's still going to give you something that's very, very formulaic. And, if we want to tie this to the beginning of our conversation, it's still going to give you something that's more like that hard science answer versus the religion answer.
Yeah.
Okay. And that religion answer is very hard to figure out how to get to because, like I was saying, the difference between hard science and a soft, something, like liberal arts, like religion, hard science explanation data gets to some endpoint sort of, where with, something that's, human feelings, right? It turns out the feeling side of facts versus feelings is going to become more and more important, I think.
Yep.
That part still exists, AI can only handle half of what this podcast is going to talk about. So you guys are in good shape, okay? Good. but yeah, so getting back to stuff like reading Mobison and research reports and stuff like this. Listen, if I was going to be doing the sort of high level, summarize a certain kind of report or an earnings announcement that comes out, what did they do for earnings and sales and I would have no ability to compete with, the Bloombergs and the Wall Street Journals out there because they have all the resources to do that, super fast. And, AI is disrupting those folks. For me, it's about the curation, the synthesis, putting things together, finding little things that might help us, better understand the world. Like, something that a lot of my subscribers notice is while I have access to the same research that gets covered by CNBC and the Journal and whomever, I'm not usually relying on whatever the headline thesis is of that report. I like to dig through these things, and every once in a while, Exhibit 55 on page 32, right, that help draw some conclusion for this analyst, I think is really interesting, and maybe can be used to tell a different story. And so I think for that reason, I feel good about where I am because, I'm not really selling any kind of formula. This is just Sam's version of curation. And I'm never going to be comprehensive and complete. But, these little things that I'm picking out in the world, I'm going to send out to you. And, it's going to be very low volume and low intensity. And we go from there. But that said, yeah, it is something that is concerning. And I'm not going to pretend like this stuff isn't going to have a huge impact on me and, a lot of my friends who literally are being affected. But, it really is a question of figuring out where the opportunity is. And I'll leave one last thing. I know I've been rattling on for a really long time, but I will point out, and this was in a Goldman Sachs note that circulated a couple of months ago that I thought was really interesting. They were talking about how, one of the great innovations was industrialized production of bread, right? The ability to, throw flour and butter and yeast into these gigantic vats, and then you flip a switch on and it mixes it, it cuts it up, it sends it through a baking machine, goes into plastic, and suddenly you have Wonder Bread for 95 cents. And anyone with any amount of money can pick this up, and suddenly you have very cheap bread. And this is a nightmare for the bakery industry, right? But it also happens to be the case that the artisanal bakery business has never been bigger.
Yeah, it's booming now.
It's booming. It's actually always been booming. Like, automobiles, right? The horseless carriage. I mean, maybe this was bad for the horse business, but even as much as, more people have gotten cars, or even not owning cars, even when people get access to ride sharing and all of this stuff, it's still the case that bicycle sales have never been higher. So, for whatever reason, there continues to be demand for some of this stuff. And I think as much as people will find they'll get a lot more of their answers from the AI generated responses when they do the Google searches, I think there will still be people who realize that they're getting something from Ryan and Sonu and Sam when they click into that blog post, or when they open the podcast. They know they're going to get something there that wasn't going to be caught in the AI summary. And so, we're like the bakers of bread here.
I like that analogy.
There's going to be people who go for that $1.99 bread. Listen, I buy $1.99 bread, but sometimes I also get the olive loaf from the guy around the corner because it's good, and it's actually arguably better. It's more expensive, but and it keeps the lights on for that guy. So it's just about you adapt. Things will change, people lose jobs, but there will people like us will continue to exist.
Well, that's good. Sonu, I think we've got time probably for one more question each, because this has been, I mean, I'm really glad what did you title this again? Going with the flow with Sam Rowe. The things we've talked about.
Have we even talked about
this? We are going with the flow. Going with the flow. Go ahead, Sonu. With the
I'm going to take a
you.
completely different tag. We talk about earnings, stock market, and more meta stuff too, sure. And AI too. But I want to talk about New York. I feel like New York and the New York mayoral election, and maybe you can tell us about what's happening there. I feel like, and this is maybe me coming as an immigrant, of course I'm in Chicago now, second city literally, but I feel like New York is the most important city in the world. People come to New York. People don't go to New York, if that makes sense, right? They go to every other city, but people come to New York. You won't live there. You won't, So tell us what's happening at the mayoral election, at least on the Democratic side. There's some very interesting candidates. I was like, we have Sam on the podcast. I want to talk about that.
I'll say two really quick things. It's interesting. It's interesting to hear from all the candidates, and there's a wide range of views, and different people appeal to different voters for different reasons. And I know that's about as generic a statement as it's going to get. I'm not quite sure where things go from here. I do know this. New York has a pretty long history of, having good mayors and pretty crummy mayors and questionable mayors. And, it goes all the way to the governor's.
And from both sides, right? It's even though you think of the city as a Democratic city, it's had several Republican mayors.
Yeah. And one day these people are great and they're changing the city, and the next day they're awful and they're doing terrible things. I think as a New Yorker, and as someone who is here to work and hustle, and while also enjoying, everything the city has to offer, there is sort of something that has been kind of, outside of COVID and 9/11 and these things happen that, there's it doesn't matter who's running the city. There's going to be things that, disrupt the flow of what happens here. But at the end of the day, in the same way that we talk about stock market volatility and things that are good and bad in the short term, and you see earnings rising up and prices going up, for
New York epitomizes
rent in New York has done nothing but go up. There was a brief blip, I think maybe in 2020 or whatever, but it's like, now we're back at record highs. And I think that sort of speaks to, even though you have, whoever you have, as mayor or governor, I think Peter Luger's will still be open, the next day. And, people are still going to go shopping, and people are still going to go to Central Park and, run the loop, and people are still going to bring clients in from all over the world, and do business here and stuff like that.
It just goes up and to the right.
There you go.
It's up and to the right.
So, Sam, this was an awesome discussion. We obviously are huge fans of what you do and the way, you 2 or 3 questions ago, you're talking about how you're different than Bloomberg or whatever, some other big news place. And I think that's what makes you special because, again, you have this funny little joke and kind of dry sense of humor along with sharing really good information. So we're obviously big fans. It's been a big honor. Building on to that last question. So today's the 11th. I'm actually flying to New York just for like a day. Got kind of busy, running around doing some stuff. Taking my 12-year-old son. Now, he is a huge pizza fan. What 12-year-old boy is not? You live in New York. You're on the ground. If I had like one meal for just a good old New York slice of pie, where should I go?
Oh, that's
I know, hard one, isn't it?
That's a really, really, really tough one. Here's this will be a side thing. Let me know where you're staying, and then we'll go from there. But don't you don't have to reveal to people where you're going.
Somewhere in Midtown, I know that, but I can go anywhere.
Yeah. Here's my advice. Here's my advice, and you'll always do pretty well. Mm-hmm. One, if there's a long line outside that pizza place, you don't need to go there. It's the thing about pizza. You should not have to wait 2 hours for pizza. I'm sure it's a great slice. If you could cut, that's great. But part of the eating pizza in New York to me is eat it because it's also something that you can, eat on the go, and it's quick. Even when you sit down and get, brick oven pizza or whatever. That's one thing. 2, don't ever go into a place that is selling dollar slices. Okay. It's a big, gigantic, and a lot of people do it because they're like, oh, this is the cheapest place to get New York pizza. Listen, the sauce, the dough, the cheese, it's all coming from, listen, you get what you pay for. Yeah. So the sweet spot is, somewhere between $3 and $6 a slice. Okay. In a place where there's no line. And I just heard this recently. This past weekend, someone told me this. This is the ultimate hack, and you'll never fail. Okay. Go inside, peek in. Every pizza shop has a wall that has photos with signatures, autographs on it. Okay. And the hack is the more D-list the celebrity, not A-list, B, C, D-list the celebrity, the better the pizza. Because that's where the locals go. That's where the locals are going repeatedly. If that picture is faded, that means the place has been around for a little while. Listen, no offense to, Taylor Swift or Shohei Ohtani or whatever, but if you see like a mega star on the wall, you don't need to do that.
I was thinking if we see Josh Brown, run the other way is what you're saying. Don't eat where Josh is eating there. It's the old Yogi Berra quote. No one ever goes there anymore. It's too crowded. Kind of.
Exactly.
Well, listen, Sam, this was awesome. We really appreciate it. We can't give recommendations necessarily, but we're going to link the show notes to your website. How about, we're at the end, like a 30-second promo. Why should someone subscribe to your work in about 30 seconds, Sam?
Sure. It's curated. It's curated for the long-term investor. So it's news, charts, data, insights for the long-term investor with not a lot of time. It's framing all the noise you're getting for, and hopefully it helps you maintain some sanity. And the Sunday newsletter is free. And if you like the Sunday newsletter and want a little bit more, you can upgrade to paid and get a couple more during the week.
Love it. It's TKer as in TKer.co.
That's right. TKer.co. TKer.co.
There we go. All right. Well, this was, again, episode 140, Facts versus Feelings, going with the flow with Sam Rowe. Sam, we're big fans. We We appreciate it. It's amazing how quick 45 minutes goes, just talking about all types of crazy stuff. This was fun. We didn't even talk about the inflation report this morning. I thought we might, but honestly, I'm glad we didn't. This was a bigger picture view of the world, and I loved it. So, and I'll get back to more normal, your regularly scheduled podcast next week, but I know this is awesome. Sam, thank you. We'll chat soon. Take care, everybody. See everybody next week. Thank you. Goodbye.
Great seeing you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.